Good day everyone. So for this video presentation, we will highlight the main difference of equity and preference shares. So we have discussed that these shares are some of the main sources of finance of the organization, and we already defined the equity shares and preference shares. However, let us discover further all about these shares, like what are the features, advantages, and some disadvantages. So with that, para lumalim ang knowledge natin about these types of shares. So let us first dig down about equity shares. Again, let me reiterate that equity shares are also known as ordinary shares. They are the form of a fractional or part ownership in which the shareholders as fractional owners take the minimum business risk. Isa sa mga most common na source ng isang long-term capital ng isang company ay ang equity shares. This is the portion of ownership na nakukuha ng isang shareholder, and equity shares have different features. So, pag-aralan natin ano-ano nga ba yung mga features ng isang equity share. You can actually identify the shares if it is equity if it consists of the features that we will discuss one by one in this presentation. So, ma-identify natin ang features nito through the following points or basis. Number 1, based on the maturity of the shares, residual claim on income. Another is based on the residual claims on assets, right to control, voting rights, preemptive rights, and of course, the limited liability. So let us first discuss the features. The first feature of equity share is based on its maturity. So masasabi natin ang share ay equity share if it has a permanent nature of capital which has no maturity period. So to make it more understandable, let me define ano nga ba ang maturity date or yung maturity period. Take note that it refers to the moment in time when the principal of fixed income instrument must be repaid to an investor. Pero sa case ng equity share, walang maturity period. So, hindi mo mare-redeem ang investment mo from the company. That is one of the main features of equity shares. The second feature is in terms of residual claims on income. So equity shareholders have the right to get income left after paying fixed rate of dividend to preference shareholder. So in this case, bago makakuha ng dividend ang isang common shareholder, the company should ensure first na na-distribute muna ang dividend sa mga preference shareholders. Then after the distribution of the dividend sa mga preference shareholders, this is the time the company will distribute dividend, if any, sa mga common or equity shareholders. So always remember na ang mga equity shareholders ay may karapatan sa income ng company, again, right after the distribution of fixed rate dividend sa mga preference shareholders. Next one is in terms of claims on assets. So take note that the equity shareholders have the right to get claims on assets if and only if the company have wounded up or in case of the company liquidation. Common shareholders have a claim on a portion of the assets owned by the company, and what do you think is the reason kung bakit may claim ang mga equity shareholders sa asset ng isang company? So this is because as these assets generate profit and as the profits are invested in additional assets, ang assumption would be dapat may return sa share ng investor na ininvest nila sa company. Dahil ginamit ng company ang investment nila para magkaroon ng additional assets at para makagenerate ito ng more profit. So, shareholders see a return as the value of their shares increases as the stock prices rise. Right to control is another feature of equity shares. So equity shareholders are the real owners of the company, hence they have power to control the management of the company and they have power to take any decision regarding the business operations. Since they are the real owners of the company, it is very clear na sila din ang may karapatang mag-decide kung anong magiging action ng kanilang negosyo. Next feature of the equity shares is the voting rights. So equity shareholders have voting rights in the meeting of the company with the help of voting power. So they can change or remove any decision of the business. So isa sa mga karapatan na napapractice ng mga equity shareholders ay ang pagkakaroon nila ng karapatang bumoto during the shareholders meeting. They can able to say no sa mga proposals na hindi naman favorable sa organization. Pero lagi nyo tatandaan na ang voting power ng isang shareholder ay nakadepende sa kung gaano kalaki ang kanyang share sa company. So if the company give only one vote per share, mas nagiging favorable ang voting right for those investors na may maraming shares sa company. So the fewer shares someone owns, the less voting power they have. Take note that equity shareholders only have voting rights in the company meeting, and also they can nominate proxy to participate and vote in the meeting instead of the shareholder. Another feature of the equity share is the preemptive rights. So preemptive right is the legal right of the existing shareholders. It is attested by the company in the first opportunity to purchase additional equity shares in proportion to their current holding capacity. It means that the shareholders are allowed to have the additional shares na magiging karagdagan doon sa kanilang existing na shares sa company. The company allows the shareholders to purchase another shares before the company shares are available to the public. A preemptive right is sometimes called an anti-dilution provision. It gives the investor the option of maintaining a certain percentage of ownership of the company as it grows. So, isa sa mga ways or techniques na ginagawa ng mga shareholders para mapanatili nila ang kanilang ownership sa company is that they practice their preemptive right. Let's say Jericho is one of the existing shareholders of company ABC. Let's say mayroon siyang 10 shares when the company offer 100 shares. It means Jericho holds 10% of the 100 shares. The second offering of the company, nag-offer sila ng 500 shares, and since Jericho holds an existing of 10 shares sa company, he will be given an opportunity to purchase as many as 50 shares or 10% of the new offering. This is because Jericho is exercising preemptive right. So, but take note that if the investor decides not to exercise the preemptive right, the company will sell the shares to the other parties, and the early shareholders' ownership percentage in the business will decline. Equity shareholders are having only limited liability to the value of shares they have purchased. If the shareholders are having fully paid up shares, they have no liability. When we say limited liability, it is a type of legal structure for an organization where corporate loss will not exceed to the amount invested in the business. So in other words, investors and owners' private assets are not at risk if the company fails. So, isa sa mga kagandahan ng pag-invest sa isang publicly listed company ay ang pagkakaroon ng mga investors ng assurance na kapag nag-fail ang isang organization, their liability is restricted to the amount of the investment in the company. It means safe ang kanilang personal assets as investors. So these are the features of equity shares. Let us now discuss the different advantages and disadvantages of equity shares. Some of the identified advantages of equity shares are equity shares are permanent source of finance. So equity share capital is one of the long-term permanent nature of sources of finance. Therefore, it can be used for long-term or fixed capital requirement of the business. A permanent financing refers to a longer-term loan or debt instrument. So, wag kayong mako-confuse when we say permanent financing. Ang tinutukoy dito is yung mga long-term source of finance that we have discussed on the previous video presentation. The next one is its voting rights. So, isa sa mga identified na benefits or advantage ng equity shares ay ang voting rights. So, no need for us to elaborate this because we elaborated this part on the earlier part of the video. No fixed dividend. So, equity shares do not create any obligation to pay a fixed rate of dividend. If the company earns profit, equity shareholders are eligible for profit and they are eligible to get dividend. If not, they cannot claim any dividend from the company. Another one is the less cost of capital. So cost of capital is the major factor which affects the value of the company. So if the company wants to increase the value of the company, kinakailangan nilang magkaroon ng mas maraming share capital. Another one is the retained earnings. So when the company have more share capital, it will be suitable for retained earnings. So sabi natin kapag ang isang company ay nagkaroon ng retained earnings, nababawasan ang cost nila when it comes to sourcing of their needed funds. This is because they will be having no interest payable. Now let's see those disadvantages. One of the disadvantages of equity share is that it is irredeemable. Again, like what we said on the earlier part of this video, na ang equity share ay hindi na i-redeem ng investor. So in some cases, because of that irredeemable feature of equity shares, it sometimes cause overcapitalization. Another one is the obstacles in management. Since the equity shareholders have the voting power, they can be able to change, remove, and or manipulate the decision of the organization. So in some cases, nagagawa ng ibang owners na i-manipulate ang decision kapag it is not favorable sa interest nila. So in that way, nagkakaroon ng conflict of interest. This conflict of interest might be one of the serious challenges or obstacles in management. Leads to speculation is the another disadvantage. So when we say speculation, it refers to the act of conducting financial transaction that has substantial risk of losing value but also holds the expectation of a significant gain. In layman's term, speculation is the buying of an asset or financial instrument with the hope that the price of the assets or financial instrument will increase in the future. So for example, if one investor buys shares to company XYZ for the purpose of long-term investment, but the investor suddenly informed that when he invests today, he will have a guaranteed high return in the future. Then the buyer, after knowing the information, bought more shares to company XYZ not only for the purpose of long-term investment, but for gaining more profit. So in this case, the investor is speculating rather than investing. Limited income to investor is also one of the advantages. So when you invest in a company as equity shareholder, you will be having a limited income. It means nakakakuha ka lang ng dividend if the company declared the dividends. So last advantage of equity share is that there is no trading on equity. So when the company raises capital not only with the help of equity, the company cannot take the advantage of trading on equity. When we say trading on equity, it is a financial process of using debt to produce gain for the residual owners. But take note that this action cannot take advantage just to purely increase the income of the common stockholders. Take note that this process allows an entity to earn a disappropriate amount on its assets. Moving forward, let's discuss all about the preference shares. So preferred shares, also known as preferred stocks or preference shares, are securities that represent ownership in a corporation and that have a priority claim over common shares on the company's assets and earnings. I would like to highlight that this type of shares have a priority claim over common shares. So kapag nag-declare ng dividend si company, sila ang priority na mabigyan before the common shareholders. That is the reason why common shareholders or equity shareholders are also called residual owners. Let us discover the different features, advantages, and disadvantages of this type of share. The features of preference shares can be defined through the following. So we have maturity period based on residual claims on income, residual claims on assets, and control of management. So let us discuss these features one by one. One of the highlighted feature is based on its maturity period. So in terms of maturity period, preference shares can be redeemable only at the time of the company liquidation. But take note that this is applicable only to redeemable type of preference shares. In this case, irredeemable preference shares, even in the time of company liquidation, the preferred shareholders are not entitled to redeem their capital investment. Another is in terms of residual claim on income. Preferential shareholders have a residual claim on income, so fixed rate of dividend is payable to the preference shareholders. If the company earns profit and declared dividend, these shareholders are the one who receive first the dividends. Take note that in case of liquidation, preferred stockholders have a greater claim to a company's assets and earnings. This is true during the company's good times when the company has excess cash and decides to distribute money to investors through dividends. So the dividends for this type of stock are usually higher than those issued for common stocks. So preferred stocks also get priority over common stocks. So if a company misses a dividend payment, it must first pay any arrears to preferred shareholders before paying out common shareholders. Another feature is in terms of residual claims on assets. So the first preference is given to preference shareholders at the time of liquidation if any extra assets are available that should be distributed to the equity shareholders. Again, let me repeat this, that in case of liquidation, preferred stockholders have a greater claim to company's assets and earnings. So preferred stocks also get priority over common stocks. Control of management is another feature of preference shares. So preference shareholders does not have any voting rights, hence they do not have any control over the management of the company. So unlike ordinary shares, hindi nabibigyan ng opportunity ang preferred share ng voting rights, so they have no right to intervene sa mga magiging decision ng company. Let's say the company declares a merging or diversification, the preferred shareholders cannot be able to change the decision. So these are the different features of preference shareholders. Now, moving forward, let us discuss the different advantage and disadvantages of the preference shares. Fixed dividend is one of the advantages of preference shares. So in case of the preference shares, the dividend rate is fixed. It is called as fixed income security because it provides a constant rate of income to investors. Another one is cumulative dividend. Cumulative dividends are required dividend payment made by a firm to its preferred shareholders. When we say cumulative dividend, it must be paid even if they are paid at a later date than original stated. If a firm is unable to pay the dividend on time, they must accumulate sufficient fund until it can make the payment. Cumulative dividends must be paid in full before any dividends are paid to holders of common stocks. So if the company does not earn any profit in any previous years, it can be cumulative within the period dividend. The next one is redemption. Preference shares can be redeemable after a specific period except in the case of the irredeemable preference shares. So there is a fixed maturity for repayment of the initial investment. Another one is the participation. So participative preference shareholders can participate in the surplus profit after distribution to the equity shareholders. Then the last one is convertibility. So convertibility preference shares can be converted into equity shares when the articles of association or corporation provide such conversion. Most convertible preferred stocks is exchanged at the request of the shareholders, but sometimes there is a provision that allows the company or issuer to force conversion. The value of the convertible preferred stock is ultimately based on the preference of the common stocks. So the following are the disadvantages of the preference shares. Number one, it is expensive source of income. So preference shares have high expensive source of finance while compared to equity shares. Preference shares are considered a very costly source of finance which is apparently seen when they are compared with debt as a source of finance. So the interest on the debt is a tax-deductible expense, whereas the dividend of preference shares is paid out of the divisible profit of the company. The next one is the no voting rights. One of the identified disadvantages of the preference share is that the shareholders do not enjoy any voting rights, so they don't intervene or change any decision made by the management. Okay, the third one is the fixed dividend only. When we say preference shares, it can get only fixed rate of dividend. So they are not enjoy more profits of the company. So if the company gain more profit, shareholder will not be entitled for the excess of the dividend rate na meron sa hawak nila. So the last one is the permanent burden. So bakit nga ba burden sa part ng organization ang preference share? So take note that this is in terms of dividend distribution. Cumulative preference shares become a permanent burden so far as the payment of dividend is concerned. Because the company must pay the dividend for the unprofitable period also. So these are the different disadvantages of preference shares. So the following are the disadvantages of the preference shares. Number one, it is expensive source of income. So preference shares have high expensive source of finance while compared to equity shares. Preference shares are considered a very costly source of finance which is apparently seen when they are compared with debt as a source of finance. So the interest on the debt is a tax-deductible expense, whereas the dividend of preference shares is paid out of the divisible profit of the company. The next one is the no voting rights. One of the identified disadvantages of the preference share is that the shareholders do not enjoy any voting rights, so they don't intervene or change any decision made by the management. Okay, the third one is the fixed dividend only. When we say preference shares, it can get only fixed rate of dividend. So they are not enjoy more profits of the company. So if the company gain more profit, shareholder will not be entitled for the excess of the dividend rate na meron sa hawak nila. So the last one is the permanent burden. So bakit nga ba burden sa part ng organization ang preference share? So take note that this is in terms of dividend distribution. Cumulative preference shares become a permanent burden so far as the payment of dividend is concerned. Because the company must pay the dividend for the unprofitable period also. So these are the different disadvantages of preference shares. So that's the end of the presentation. If you have any questions and points of clarification, just notify me. Thank you and God bless everyone.